Good afternoon. I have Sir Ronald Cohen, who we will call Ronnie, and Dina Powell joining us for our latest Zoom leadership series today. Welcome to both of you.
Pleasure to be with you.
Hey, Bruce.
Now, Ronnie is in Tel Aviv, where he said it's 75 and gorgeous, and Dina has 2 feet of snow up in Connecticut.
At least. I think it's even more.
Awesome. Well, one request as we get started is Dina knows half the people on the call from various prior jobs. So shoot her an email, connect when you want to connect. The goal today, though, was have yet one more in a series of conversations we've been having with tremendously interesting people about things they're doing, books they're writing. The framing concept is leadership in an era of pandemic. But of course, that's ranged from folks like Maryland Governor Hogan to Steve Case, with his Rise of the Rest, David Rubenstein and all the great stuff he's doing for the Economic Club in Washington, among other nonprofits. And today we're joined to talk about impact investing. And we're incredibly lucky to have the literal father of impact investing, according to Wikipedia, which is never wrong, Sir Ronald Cohen, and then one of the premier practitioners of attempting to invest to achieve inclusive growth in Dina, who's up at Goldman, who has successfully pioneered several initiatives, and they keep giving you bigger things. So, Ronnie, I'm going to start. I have your book over there. It's called Impact. It's available on Amazon, and I'll happily share a link with everybody who had RSVP'd. We'll see if that maybe adds 5 to your numbers, maybe 10. But I'm interested in what inspired you to write the book. How did the effort to start communicating this more broadly begin?
So, Bruce, first let me say how delighted I am to be here with you and with Dina and with everybody else on this webinar to exchange views. I spent my career, as you know, in the venture capital and private equity business, and I was lucky enough to be in the US at business school in the mid-60s when venture capital was just appearing, and to have realized that this was going to be big and to have got in. And as I continued my career in venture capital, into which I had stepped partly because I wanted to create jobs in the UK. I'm a 60s kid. I had the ambition to do good and to do well. I realized that far from closing the gap between rich and poor, all of my work was helping people who came from nothing to make money and enrich those around them. But it exacerbated the gaps between rich and poor instead of closing the gap. And so when the UK Treasury asked me to look at the issue of poverty 20 years ago now, when I was still running Apex Partners, the firm I co-founded, I immediately said I would do that. And I realized that we had a system where we provided money to those who wanted to make more money, but we hadn't been imaginative in finding ways of funding those who wanted to improve lives on the planet. And that work led to the invention of a new security, which Dina and Dave Bahigian are certainly very familiar with, among others on this call, where the return on the social impact bond depended on the achievement of a social good. So if you reduce the number of young people going back to prison, the investors will get their money back with an increasing return according to the greater the number that avoided going back in. Now, I didn't realize it at the time, but when I headed up the G8 task force a few years afterwards, I began to realize the whole world was moving in the direction that the social impact bond had charted out, which is to optimize risk, return, and impact. And all of a sudden, a light bulb went on in my head. I realized that our system, instead of bringing solutions, is creating huge damage socially and environmentally because companies, in their pursuit of profit, completely ignored the harm that they were doing and nobody was being held into account. And so the idea came, which is the core of the book, that actually, if you look at the 40 trillion of ESG money today, environmental, social, and governance money, which is being invested to achieve impact, environmental and social impact, in addition to profit. If you look at impact investment proper, where you measure the impact created, unlike ESG, that was hitting $1 trillion, which is equivalent to the whole of the world's venture capital pool. And our governments haven't realized this yet. And Corona is creating pressure now on governments because they have heightened social issues because of higher unemployment. And actually, the solution is to get our economies to optimize risk, return, and impact for businesses and investors, to build the businesses which have as their objective not just to make profit, but to make profit and improve the planet and the lives of people.
So when you say that, does that mean that profit is inherently sacrificed for a greater good?
So a lot of people think that because the connotation of impact is doing good, and doing good means philanthropy, and philanthropy means giving money away. But what you begin to realize today is actually it's a better way to invest. It delivers better returns than just optimizing risk and return. Look at coal companies. Coal companies' value has gone through the floor. Part of the reason is people don't want the negative impact on the environment that they're creating. Look at ExxonMobil, which has said it wants to double up on fossil fuels. Its market capitalization has gone from 500 billion 3 years ago to 130 billion today. And you can compare it with its competitors. Shell creates 23 billion of damage a year environmentally from its operations against 39 billion for ExxonMobil. BP creates 13. And so you begin to see then that if you're going in the right direction, if you're going to clean energy from fossil fuels, your company is going to be worth more. And if you're in clean, like Tesla, your share price multiplies by 7 times over a single year, because that's what investors are looking for today. They don't want to invest in companies that wreak havoc with our planet and the lives in our society, just because they think they can deliver profits.
So Dina, you're putting a lot of these ideas to practice, although it feels like when I think of some of your work, I was really excited about the 10,000 women and 10,000 small business initiatives, which I see as maybe adjacent to, but not quite what Ronnie is talking about, where what Ronnie's talking about is the actual ROI on dollars, assets under management, as opposed to, leveraging what you guys know. And I'm interested both in those initiatives, what inspired those two initiatives, how you've measured their outcomes, but also whether you see them as part of what Ronnie is describing, or like I do, you see them as adjacent, and that there is this separate from helping others, there's also helping investors realize how to optimize investment, which takes impact into account.
Sure. Well, thank you, Bruce. Thank you for having me today. It is so wonderful to see so many friends on the screen. I got a little bit in trouble with Ken Melman the other day because I said, you would not believe it, only Bruce Melman can bring this many people together to talk about these important issues. And to be with Sir Ronald. He has been such a mentor to me, and he's being way too humble in how he's describing what he did, which was really transform capital markets to think about this kind of investing, not as philanthropic and not as only profit driven, but really as the way to sustainably invest in important areas that transform communities around the world. And we have worked with him, as Dave Bohegan knows, on a number of social impact bonds, which are literally a market product where you certainly make a return, but you are changing something significantly. And we can go into a little bit about how those work and how much now the market really is so open to those. You know, as Sir Ronald said, we really are at this, I think, tipping point moment. Every single one of my clients at Goldman Sachs is unbelievably focused on this issue. And I'll tell you honestly, there were some years where people were focused on sustainability, the environment, diversity, meaningfully, but kind of from a public affairs perspective. Today, just like the Exxon example, they're focused on it because of the bottom line. You can't be a Fortune 500 company in the United States and not have a meaningful program that is something that uniquely you can do to have impact. And that's how we thought about it in 2007. As Brenda and Stacy know, because they've worked with us on these initiatives for many years. In 2007, our chief economist at Goldman Sachs in Japan wrote a piece called Womenomics, which actually showed the impact of greater labor force participation by women just in Japan, and the impact that that would have on GDP growth in Japan, and of course, what global impact that would mean because of the size of the Japanese economy. You would not believe how this piece of research took off. And what we started to do was started to make a business case. Goldman Sachs looks at investments every single day and tries to find what are the very best ones. And investing in the economic empowerment of women around the world, we realized was one of the best investments we could make that would drive GDP growth, which is what we try to do around the world. And frankly, would have a multiplier effect because women take 90% of any of their income and reinvest it into society. You know, I have to tell you, in 2021, I'm really proud that everyone is talking women's empowerment. But I can honestly tell you at that time, the only institutions that were talking about it as a means for change and growth were the World Bank and the United Nations. So when you have a company stand up and say, this will actually make change and drive growth around the world, it really had an impact. And when we're obviously very proud of that and working with thousands of female entrepreneurs around the world, we made that case. We tracked their job creation, their revenue growth, and then we were actually able to measure. And I think you'll hear from Sir Ronald and I, measurement is the most important piece of this, because if you don't have a meaningful metric system and hold yourself accountable and transparently release those metrics, you know, you can't really be a model in this space. So we actually were able to measure the metrics that at Goldman we're used to measuring, but then we were also able to show that every one of the women, 90% that graduated from 10,000 women, were mentoring at least 20 other women. And again, taking their income and reinvesting it into society. Some of you may have read Nick Kristoff's book called Half the Sky. And in it, he actually commissioned McKinsey to take a look at developing countries and where men spent their money and women spent their money. And I'm sorry, guys, I have to break it to you. Men took 90% of their proceeds and invested it in alcohol, sex, and cigarettes. You can read it, it's in the report. Women around the world took 90% and invested it in education, healthcare, and frankly, started to gain political voice in countries around the world. I'm not being critical, I'm just giving you the facts. So we really felt that we had found this investment that really was a unique multiplier effect. And similarly, in the United States, we created a program called 10,000 Small Businesses, which works with men and women entrepreneurs in underserved communities, providing them capital and education to grow those small businesses. And post-COVID, you know, it's been devastating, as we know, for small business owners, but we've been so proud to continue helping. So you're right, Bruce, that's a model which does take philanthropic and lending capital from Goldman Sachs, because we work with community banks to provide the growth capital for these businesses. But we don't like to think of it as philanthropy. We actually like to think about it as driving economic development and growth around the world and creating jobs. And so these are all different spaces, but I think defining them, we shy away, Sir Ronald and I, from calling it philanthropy.
So Dina mentioned metrics, which you're absolutely right, is arguably one of the holy grails. And I know pretty smart organizations like S&P Global are trying to standardize that. You know, I'm interested both in what Sir Ronald's metrics, who's developed them? Are they universally available? Can a regular investor like myself, tiptoe out of the S&P 500 and find those sort of metrics? And then as well, obviously Dina, Goldman's as good as it gets at thinking about all these kind of things. So I'd be interested maybe first to hear from Sir Ronald, what metrics you've used and their availability, and then whether in classic Goldman fashion, you guys have taken them and made them, really unique and amazing.
So Bruce, I'm privileged to chair an effort at Harvard Business School, which is taking the metrics which have been prepared about tons of CO2, which companies are emitting. And this is information which has been made public by companies, sometimes under legal provision, and most of the time voluntarily. And then putting a monetary value on them and doing the same for diversity, advancement of minority groups, differences in pay on the basis of gender or ethnic background, and also measuring the product impact of a company. And we've put on the web, you can all go to it, HBS, IWA, Impact Weighted Accounts Initiative, and you'll see there a picture of the world as it's going to be. So you'll see the figures of 1,800 companies' environmental damage. These are public companies across the world. If I say to you, Bruce, that 250 of them create more environmental damage in a year than they deliver in profit, that a third of them create environmental damage equivalent to a quarter or more of their profit, and that taken all together, these 1,800 companies create $3 trillion of environmental damage in a year. So if I take a British company, Associated British Foods, which makes one of our great tea brands, Twinings Tea, you look at those figures and you see Associated British Foods, very prominent British company, profit 1.6 billion a year. Environmental damage, 1.8 billion, right? So it gives you an insight into the way in which businesses are being judged now. And we're going to add another several hundred companies to these 1,800 with their environmental damage. We're going to add several thousand companies in the next 2 or 3 months. Employment impact, in the way that I have described, measured according to the differences between the demographics within the firm and outside of it, and ascribing the remuneration levels that would have gone to people from these communities had they been employed. And we're going to be adding several hundred companies' product impact within the next 6 months across 11 different sectors, measuring things such as affordability, value for money, and so on, and impact, of course, on the environment and on people. So in summary, Bruce, we're living in a period where there are 3 major forces which are converging to bring about this impact revolution, which I describe in my book. The first is a massive change in values. The fact that consumers don't want to buy products of certain companies because of the damage they cause socially and environmentally is a mega trend today. That's a mega trend. That's why investors have become so sensitized to these views. And you begin to realize in the Harvard data that there is a relationship between greater damage and lower stock market valuation. So that's one major trend, and it's here to stay because we're unable to meet the social and environmental challenges that keep erupting in violent rebellion, Black Lives Matter, Gilets jaunes, Chile, Lebanon, and also in fires, floods, desertification, and so on. The second major trend is the trend to very advanced technology, such as artificial intelligence, machine learning, augmented reality that enable us to deliver impact much more effectively than previously and to deliver it to the furthest flung corners of the world. And the third is the use of big data and huge computing power to achieve a breakthrough in the measurement of the impact of companies.
Dina, are you guys working with the Harvard data that Sir Ronald is developing, or has Goldman come up with its own metrics? And can you share how you guys reassure your investors that this is not philanthropy?
Absolutely. We are working with the data that Sir Ronald is working with at Harvard now. And frankly, the metrics that he created many, many years ago before there were any metrics. And I think that's a little bit part of what gets confusing when you talk about social impact, ESG. Frankly, there's so many people talking about it. It's a very crowded market right now, and it is defined differently by many people. So in some ESG funds, you have investments in everything from companies that have women on their boards to solar energy companies. And so I do think it gets confusing and it gets very hard, to think about how you measure real impact. And Sir Ronald and I often talk about that's a worry for us. And that's why some people say it's just too hard to even, articulate what it is that we're doing. And so I think that's why these metrics are so critical and sharing the data is so critical. Also, I think companies measure things differently, and certainly specific industries do. But at a financial institution like ours, we decided to think about it in terms of the three primary activities of Goldman Sachs: advising our clients, investing firm capital, and financing a lot of the work that our clients do around the world. And so David Solomon, our CEO, a year ago, announced a $750 billion commitment over the next 10 years, where we are committed to advising, financing, and investing alongside or with our clients on sustainability. And we have two tracks of that sustainability: climate transition, and we purposely call it transition because I think we have to be focused on progress, not perfection, for many of our clients in difficult sectors. And the second is inclusive growth. And that is a whole bucket of investments that really address income inequality and a whole range of things. And I think I just want to pause there. Income inequality today is so much more severe post-COVID. It has hit the most vulnerable. Last month's jobs report, I had to read it 3 times. 100% of the jobs lost were lost by women. And Stacey Kerr, I'll give her a little plug, working on childcare issues, for example, is so important. And so how you think about inclusive growth and what we need to do to address that issue is that there's a whole range of things, but that is central. And so how is it that Goldman measures that 750? So this year, we have actually looked at every transaction in investment banking, asset management, our merchant bank, and we've looked and we define it really hard. We have our compliance and auditors look at it and say, does this really count as a meaningful investment or financing that move the ball forward on climate transition and inclusive growth? So far, we're exceeding that goal this year. And I think part of it is, if you have a marketplace and a company like, for example, Apple came to us and asked us to think about how they deal with achieving their goal of going carbon neutral in several years. And if you're Apple, no matter how much you think about it for your own platform, your own footprint, right? Your stores, your factories, and you try very hard to address that issue. And then you impose those same restrictions on your vendors. Even then, you can only get so far. You have to create a new set of financial products, things like carbon offsets and other things, to actually ultimately reach real carbon neutrality. And so that's where a financial institution like ours, we hope, can really help a client. Another example that I'm really proud of is that we bought and invested in, we're the largest investors of the first 2 solar energy companies in India. And that was many, many, many years ago. You wouldn't think to know it, but Goldman Sachs is now the largest provider of renewable energy, believe it or not, in India through a series of other entities that were purchased and leveraged. So I think there are very measurable ways to be able to say we've really helped our clients achieve, these goals that they have around these areas. But we've also done it in a thoughtful way that has a return. And so those investments obviously have done incredibly well. Again, like the example of a Tesla, there are lots of baby Teslas around the world that no one's heard about. And, we have a fund that is very directed on investing in them. And so we're able to say to investors, you care about these issues? Great. We have a wonderful fund for you. We can show you where your dollars are going to be invested. And I'm really proud to say the returns on that fund have been exceptional.
So, Dina, staying with you, just given the nature of your organization, I'm interested in how you're hiring, how impact investing and the work that you're doing on inclusive growth, just everything I think I know about millennials and particularly Gen Z tells me that the best and the brightest want to work for organizations that have purpose. So it would seem to me that not only are you doing what Sir Ronald makes clear is actually smarter long-term investing for purposes of greater returns, which that's what Goldman does. But it also feels like these initiatives may be essential to your ability to recruit and retain the best and brightest employees. And I didn't know, you're on the management committee, how much insight into that have you found?
I mean, it's one of the most important priorities we focus on. I have some Goldman colleagues on the phone. I see Pablo Ross and Nicole Rue here on the phone with us. They're going to be the statistic I give you, which is, here's a shocking statistic. We have 40,000 employees around the world at Goldman Sachs. 65% are millennial. So we really have to be focused on these issues. And if you are not a company today that is using your capital and very focused on the impact that you can have in the world with a platform as large as ours, it is really hard to recruit that incredibly talented generation. And so we really say it is the business case. This is not on the side a nice to do initiative. It is fundamentally a business case for us in terms of recruiting the very best people. And now, servicing our clients, because this is all they want to talk about. I'll give you one example of a set of clients, and Dave Bohegan knows all about this, but because of his work at DFC and elsewhere, sovereign wealth funds are a very big, pool of capital around the world, increasingly larger and larger. And most sovereign wealth funds today actually have a percentage or a quota where they have to invest a portion of those assets in so-called ESG funds. And so this is just something that's just increasingly, as we're saying, becoming an imperative for an institution like ours. To your question, Bruce, it hits at almost every touch point. Who do we recruit? How do we engage them in these issues? And how do we think about our domestic and global clients and their needs in this particular space?
Awesome. That's I had assumed that's what you'd be finding. Sir Ronald, when you talked about when you graduated Harvard Business, that was also right around the time that Milton Friedman famously declared that the purpose of a CEO of a corporation is to maximize shareholder value and not to worry about other things that might potentially be distractions that are really government or other job. I'm interested in whether you think Friedman was wrong at the time or was right for the time, but wrong for this time, or how do you see this stakeholder shareholder debate that the Wall Street Journal editorial page really enjoys?
Right. So I think Friedman was a reaction to government trying to step into the economy to make it more competitive by encouraging companies to merge, owning companies in the case of Europe, nationalizing them, and so on and so forth. But the result of Milton Friedman's neoliberalism is the mess we're in. Because if companies don't worry about the impact that they're having, then governments have to clear up the mess, and they just can't today. The scale of the damage is so huge that even if governments allocated more of their resources, they wouldn't be able to close the rifts that exist in our society or to stem the environmental damage that we're creating. It has to be done at the level of companies. And our economic system isn't engraved in stone, Bruce, as you well know. We started off with the mercantilism 200-300 years ago when, you know, nations had tried to amass gold because that was, in their view, the measure of their power. Then we went into capitalism and laissez-faire, with government not interfering, leaving everything for business to deal with. And that helped pull billions out of poverty and provided extended prosperity for most of the population. And then we had the Great Depression, and Keynes came along and said, look, governments can't just watch people stay unemployed. They have to use interest rates and the supply of money and taxation in order to maintain full employment. And then came Friedman with his views. And today, basically, we're saying the purpose of business is to make money and improve lives on the planet. So impact is really the successor to neoliberalism, and impact economies, where investors and companies optimize risk-return impact, where the impact is measured, and there are generally accepted impact principles and auditors who audit those numbers, is where we're heading. And I hope the Biden administration may actually be the one to take us there, in the same way that the Roosevelt administration took us to transparency on the profit of companies in 1933 and 34, when after the great crash, investors realized they didn't have transparency on the profitability of companies. Every company picked its own accounting policies. There were no auditors. Companies could put a chunk of their profit in a hidden reserve and not even tell shareholders about it. And so in 33, 34, the US led the world in bringing transparency on the profit of companies. We now need transparency on the impact of companies. And if the Biden administration wants to achieve its goal of improving society and the environment, the most powerful lever it has for achieving this is mandating the publication of impact accounting or impact weighted accounts by companies starting 3 years from now, because every company would then begin to measure its impact and will begin to deal with the negative impacts that it's creating. And it'll bring us to a fairer tax system, Bruce, where we can tax companies for the damage they cause directly, instead of taxing everyone for the damage that's caused by some.
But how much of that, though, requires a level of quantification that's not always so easily accomplished? So, for example, the environmental, I understand a lot of work's been put in, but I'm thinking of China and human rights. Like, what's if slave labor is being used in Xinjiang province? What's the dollar to assign to that?
So, to the extent that a company is underpaying people, and slave labor is the underpayment of people, paying them nothing for the work that they are doing, it's going to appear as a negative charge in its impact weighted accounts. It's amazing how much you can measure if you think methodically about it. Now, the thing about the capitalist system is it's capital that drives change in company behavior. And if companies are judged by investors in the way that we've seen happening, and by the way, could we have expected, Dina, when you and I appeared on the Goldman Sachs platform before you went into the administration, that we would have a rebellion at the Procter & Gamble shareholder meeting in 2020, where 2/3 of shareholders vote against the management of P&G because of the damage it's causing through deforestation as a result of its use of palm oil. And we're going to see these shareholder rebellions multiply for environmental and also for social damage, lack of diversity, unequal pay, slave labor, and all the rest of it. And the transition plans Dina was talking about, and by the way, she's been a force of nature in this whole field for, forever. And I'm thrilled that she's back in the trenches with us. We're going to see transition plans from many companies, and many companies may well have to accept that shareholders have to approve them for zero carbon transition, but also for employment impact transition.
Yeah, Dina's been a force of nature in lots of roles over the years, and so many of us on the call have been lucky enough to benefit from the hurricane as opposed to try to stand against it. So many of us share your fondness. I'd like to. We've got about 9 minutes left, and then I promised we would end. I want to actually ask a personal question of both of you, and then I know at least one, Bohegan, I'm going to call you out to appear and ask your excellent, interesting question, because David Bohegan, of course, is the genius behind putting this event together in this conversation. So we'll certainly let him ask the first audience question. But my last one is, a fascinating fact when researching the biography of both of you is that both of you are originally born in the country of Egypt. And at a young age, you both left, Sir Ronald, your family to the UK, Dina to Texas, which see, David Sampson, I'm treating Texas like it's the country as opposed to the United States. I've always thought of immigration as the ultimate act of entrepreneurship, and somebody who's, if you're wired to say, let's drop everything, leave everything, go and dare to do something new, that's, I want that gene pool in my country. It seems really positive. I'm interested in both of your experiences as investors, whether that formative first chapter of life you think has colored how you think about investing, how you think about business. So I'll start, Sir Ronald, with you, because you came to UK before Dina came to the US.
Okay, and I mean, Dina and I could have been speaking to you if Egyptian politics had taken a different turn in the 1950s from Cairo this evening. The answer is it is certainly a big driver of effort and, if you're lucky, of success. There's no doubt. I'll give you a very brief example of it. I went with my dad to be interviewed by the headmaster of a state school. When I arrived in London at the age of 11, I couldn't speak English. And my dad said to the headmaster, look, it's not because he's my son, but if you take him into your school, he'll be top of the class. And I felt, look, I can't let my dad down. My dad lost everything in Egypt, came to London with nothing, was walking the pavements of London thinking how he was going to make a living to sustain his family. I have to be top of the class. And then from there on, you have to be able to support your parents. You have to make money to become financially independent. But at the same time, you have all these other values about improving the world, about giving to the poor as you become successful, and then about finding a career where you can do both.
Well, I certainly haven't been as successful as Sir Ronald, but I do think that being an immigrant to this country certainly shaped, my life. Of course, I will say, Bruce, my daughter today, when I said, I have to go and please be quiet in the other room because there's an important speaking engagement. And she said, who's the important speaker? So they do keep you grounded. I came to the United States, to the great country of Texas. That was for David Sampson when I was 4 years old and didn't speak English. My father, who had been a captain in the army under Anwar Sadat, and my mom, who had just graduated from the American University in Cairo, left everything, left their church, their family, their friends, and quite a leap of faith, and had to do all kinds of things in Dallas, Texas, to ensure that my sisters and I could go to a good school to learn English. And, you know, it's interesting. Growing up, they would often tell the three of us, you know, we left everything behind. We left our homeland. So the three of you could pursue your dreams and reach your potential as long as you're a lawyer, a doctor, or an engineer. So Sir Ronald and I bond on many things and have had many similar experiences. Am I right, Sir Ronnie?
Certainly, certainly.
So when I took this crazy path, I got into school, a law school, and I was heading that way. And then I had this crazy opportunity to come to DC and work for K. Bailey Hutchison, and then Dick Armey and House leadership. And I always remembered, though, my favorite governor, George W. Bush. And I raised my hand to work on the campaign. And I'll tell you, I have to tell this part of the story because my parents never got any of that. One time my dad said to me, I really don't know why we left Egypt. Yeah, and it's partly because they didn't understand politics. No one in Egypt, an average citizen, certainly also a Christian in a Muslim country, could work in government or politics. And so I have to tell a quick story about when President Bush met my dad at the White House when I was working there. He, very sweet, he kind of beelined over to him. He could tell who the dark-skinned man next to me was. And he said, you must be Mr. Habib. And my dad was just in shock. And he said, you've raised a great girl. She's a very important advisor to me, which was BS at the time. I was like a mid-level staffer. I later became a member of the senior staff, but not at that time. And he walked away. And my dad said, kind of in shock, teary-eyed, he said, you know, as proud as I am of you, there's not many countries in the world where a man can bring a little girl who doesn't speak the language and watch her serve the president of his adopted country. So I certainly am so proud of that. And yet also, like Sir Ronald, think that this unbelievable chance to come to the United States, the UK, to leave a country where you're a discriminated minority is a blessing I hope none of us ever forget.
That's both terrific, inspiring stories. I'm going to make Bohegan ask a question after that because there's no way to follow it. Dave, hop on camera, say hi to everybody, and I thought your question in the chain was great.
Great. Well, thanks, Bruce and Dina and Ronnie. You've all been great mentors on my impact journey as well. And you guys have heard me say before that you can't solve problems at the same level of thinking at which they were created. I'm quoting Einstein there, that's not me. So it's great to see Goldman and governments and NGOs all getting together to do this. And at the end of the day, Ronnie's talked in his book about risk, return, impact, and Goldman needs to serve their clients. And often I hear about outperformance in public markets with ESG. What I'm searching for is in private markets, in venture capital, early stage, where these innovations you're talking about in AI and machine learning are going to come from. And so are we seeing the outperformance in impact investment funds, maybe like Ken Melman's or maybe like others that at the earlier stage augur for this growth in the future?
So I think we're seeing it in some investments, Dave. So double bottom line, the fund which invested in Tesla obviously achieved great returns. The number of venture firms that are taking impact seriously is relatively small still. Like in Silicon Valley, it's still not a totally accepted way of thinking, although Kleiner Perkins famously went into clean energy, as it turns out, correctly, but ahead of time. I think the private equity industry has realized it sooner, maybe because of pressure from investors. And now you see a number of the leading firms, including Bruce's brother's firm, KKR, launching specialist impact funds. But I have no doubt that 10 years from now, impact is going to be part of every alternative asset class. It's going to be part of venture capital, private equity, infrastructure, real estate. I have no doubt at all.
Dina, we'll give you the last word, although I would recommend against betting against Sir Ronald. He knows what he's talking about here.
He knows way more than I do when he's talking about that, because he literally built the first funds that ever did it.
Right.
You know, Dave, I would just add to what Sir Ronald said, or stress. You notice he said serious funds. And I think that is the risk here. There's a risk in how you measure both sides of the equation, what you're calling ESG investments. So when you're allocating your capital in a fund, what is that fund manager actually counting? And so that's really important. And how do the returns then compare to other similar investments? And I think we really have to be careful and clear about that, or this, type of investing will lose credibility. I think it's a lot easier when it's a fund like what Ken does, because Ken can actually show, I invested in this company, and this company is going to change the way satellites are made, or it's going to enhance the life of batteries that Tesla can't quite get to, or, very tangibly. I think what's harder, to be honest with you, is more of the fund to fund model, where it's a bucket of equities and different things. And their metric, again, is a broad definition of ESG. So I think the ones that are going to emerge as the most successful, I would argue, are very focused. They really show exactly what the investments are and how those investments really can be defined as impact, and then, reveal their returns transparently as well.
Great question, Dave. Great answers, both Dina and Sir Ronald. I am maniacal about ending on time, like your old boss and my old boss's boss, Dina, the great President Bush 43. I want to thank you both for making the time. I want to urge everybody, get the book. I put it in the link. And for those who are regulars at the Melman Castagnetti, Rosen and Thomas Zoom Leadership Series, the next two are Melody Hobson of Ariel Investments towards the end of February, and Ursula Burns, former CEO of Xerox, who's, I forgot what date, I think at the very beginning of March, but I'll send reminders out. Thank you both. Everybody have a great day. Dina, good luck in the snow.
Thank you. Thanks, Bruce. Thanks,
Thank you.
so
Thank
nice
you.
to see everyone.
Thank you.